Hello, ladies and gentlemen. I'm Joseph Novichko, Senior Trading Manager with GDM. Today's outlook, as usual, we're starting with the Asian markets. What happened during the session? They closed mixed on the last day of 2016 after down prematurely. They were down prematurely twice on a rapid sell-off to a 12 years low. On a high volatility. On Friday, however, the Shanghai Composite Index closed 1.98% after trading down as much as 1.89% and up as much as 3.32% shortly after the market opened. Hong Kong's Hang Seng Index also rose 1.12%. China's regulatory body that the commission that suspended trading on Thursday recently implemented a circuit breaker, a regulatory tool designed to limit how far stocks can fall after the market shut down for a second time this week, however. The first shutdown was triggered on Monday after the CSI 300 index fell more than 7%. And also tracking the European markets trading at the moment slightly higher as Chinese stocks stabilized after authorities scrapped a trader circuit board. The Pan-European Stock 600 index was up about 0.3% at the open. As well as we're also maintaining our focus on the major indices in Europe, as well as such as the FTSE 100 index. It is at the moment at 60.05.06. This is 50.98 points higher, or 0.86% higher at the moment. Also, the DAX index is up at 56.31 at the moment, or 0.77% change up with 76 points, a little over 76 points. The CAC 40 as well, also higher with 23.71 points, or 0.54% at 44.24.29. Looking at the currencies at the moment, the yen reversed its course and sagged against the dollar, while of course the Australian dollar rebounded slightly on Friday after the People's Bank of China set a higher yuan guidance rate for the first time in 9 days. The dollar was slightly higher at 0.5% at 118.3005. Yen pulling away from 4.5-month low of 117.33 struck overnight. Of course, the greenback was still poised to lose about 1.7% this week, which saw risk appetite battered globally and benefited the safe haven yen. After, of course, China guided the yuan sharply lower. Stalking worries about the health of the world's second largest economy. However, a strong report today could still shift the attention back to the Federal Reserve and the prospect of more U.S. interest rates, which is going to gradually go higher throughout the year. Against the greenback, the euro was slightly lower at 0.4%, 1.0883. The common currency, which struggled against the dollar and the yen this week, surged about 1.4% overnight. This was its biggest one-day gain in a month. Gold in the commodity sector gave up its recent gains after hitting a 9-week high above the 1100 mark on Friday, as China guided the yuan slightly higher for the first time in 9 days, supporting Asian equities. Gold had dropped 0.5% to 1103.26 an ounce in early European trade, after climbing to 1112 earlier in the session. This was its highest since November 4. US gold futures also fell from a 9-week high, as well as we're tracking the US crude West Texas Intermediate in the energy sector. It's trading 63 cents higher at $33.90 a barrel after settling 33.27. OPEC's smallest member, Ecuador, which has increased debt and reduced investments due to the oil prices plunge, said on Thursday it would continue to press for production cuts at the cartel's next meeting scheduled for June. And the most important in the calendar today, ladies and gentlemen, the non-farm payrolls released by the U.S. Department of Labor at 13:30. Along with it, we will have a look at the latest readings of the unemployment rate. That's all for today. Stay tuned. Major volatility is expected on major commodities and currencies. That's all. See you next time. Bye-bye.